everyone's winning from this collaboration, and it all starts by people taking the initiative to selflessly give back and help others, and then you pot up, and there's a lot of success stories from doing just that.
All right, guys, we have a special guest tonight on Sunday Video. Came up here for Traders for a Cause Boston. We came up to the coast, checked out Maine a little bit, and he wanted to give you guys a couple thoughts. So here he is.
Special guest here, the Juan Lansby. And so I think what I want to talk about today is a lot of people always hear me talking about building a pod and the power of collaboration and networking. And a lot of people ask, how do you go about doing that? And I talk about reciprocating value and giving value and putting yourself up there. And I think the beauty of some of these networking events, like Traders for a Cause Boston, is even for myself, the different traders that I meet. And when we talk about giving value, so there was one trader that happens to be an IU member, Ed Barry. And so he loved some of the stuff that I was doing, and he gave back a little bit to my nonprofit. And I offered to grab lunch with him. And it's so funny. It just so happens that Ed was going to be hanging out with Nate the same weekend I was. We end up sharing a car ride where he's able to help me out with that. And this is someone where you build that personal connection. You learn their life story. You learn about what drives them, what motivates them, and then you're invested in their success. And so then what happens as a result of that is I'm introducing Ed to one of my friends that's a really nice trader out in California, and they're able to chat, they're able to collaborate, and it's one of these things where like everybody ends up winning, right? The beneficiaries from Traders for a Cause end up winning. Ed's ending up winning. I'm winning. My friend who I'm introducing him to, everyone's winning from this collaboration, and it all starts by people taking the initiative to selflessly give back and help others, and then you pot up, and there's a lot of success stories from doing just that.
Well, what's happening, guys? We have another Sunday video coming at you for the 28th of August and the week ahead. It's a much different market, lots of good opportunity, lots of action left and right, but you know, it's not necessarily 100% the A+ kind of in my wheelhouse trades. And there's definitely opportunity each and every single day, which I think we have some for the week ahead, but it's a good reminder to myself, don't force it, because that has been a lot of what I've done in 2023, where, you know, February had a great month, but, you know, you're just trying to not necessarily catch up to prior years, but you're kind of, I hadn't adapted, I guess, for a couple of the months, and I was still trying to scale everything, and you end up kind of minimizing the trade. And so for 2 or 3 years in a row, you know, when I literally have more arrows than the candles on the chart, the reason for that is because, you know, I like to scale, and in the event that it flushes, I've got size. But if I scale and size up and it holds on, it's not doing what I expect, then I'll size back down. And then as it starts to get to a point where I think it could flush again, I'll do the same thing and repeat and repeat, repeat. And that gave some exponential kind of risk to reward opportunities in the prior years. But this year it's just minimizing, just like the NVOS example that I went over just last week, where, you know, great entry, but then I ruined my average and I had to end up covering rather emotionally instead of, you know, covering it where I knew to, but sort of had a bias. I wanted it lower, and you know, ignored what the tape was telling me. So at any rate, I think that you know, I went over exactly what has not been working for me in 2023, the mistakes that I've been making, as well as how I've changed and what the priorities now are, and sort of how I see my trading going for the next, you know, near future anyway. And so at any rate, I think you know, the guys at Clover are fantastic. Their hearts are in it, and that's really what I look for in this industry. You know, I'm not looking, I think it's probably obvious by now, you know, for me, there's no competitors, right? Everybody always looks at different chat rooms and services and thinks, you know, they're competitors, but we're all competing against the market, right? And all I want to do, and I think you've probably seen it with the interviews and things like that, it's not competitors. It's put good information in front of people, and that's what matters. We have that ability to do so with the channel that we have and the subscription and the subscribers on YouTube that we have. And so my goal is just to continually put good information in front of you, and hopefully at some point you take something away and it furthers you in whatever path you're taking. So on that note, I also talked a little bit about exactly what we talked about last Sunday. I'm not going to bore you again, but I like to be an open book just in case somebody else is going through that same thing. And 20-year-olds won't get it, and maybe some 30-year-olds won't. But if you've been trading a long time and you've got kids and you've got a spouse and you're kind of doing the same thing as me, it might be refreshing to hear that, just to kind of reevaluate where you're at and whether or not you're actually fulfilling the goals that you set out to be. It's so easy to compare to people online because you've got these 20-year-old hotshots. They've got the access to information much faster than I did and many other traders did, kind of growing up and kind of figuring it out on your own. You've got subscription services. You've got these fantastic traders sharing ideas where these young minds can reverse engineer this at a much younger age and become great. And you've got that 10-year kind of period where you've got no responsibilities, you've got no kids, no spouse, and no real risk, right? So I think that's why we're getting some of these hot shots at such a young age, and it's really refreshing to not only see that, but also see how grounded these guys are. So that's my compliment to the Clover guys. I really enjoyed it. I thought the event went really well. It was good to see a bunch of new faces that I had never seen before, but also there was a lot of faces that I've seen both at Traders for a Cause and IU, and even the night before. The night before, we did the Traders for a Cause Boston event. We had about 80 people or so. It was a big success. I would say 20% or so, maybe 30% have been to an event before, a familiar face, and then all kinds of people I've never seen before, which is incredible. And that's what these events are about. I know Vegas can get expensive, right? And we've got a cost to it, and then you've got the flight to get in, and then you've got the your room, the hotel room, and it starts to get up there. So I know that not everybody can get out there. So we wanted to start these regional events, go to different cities, different spots where potentially traders that people care about are, and start to spread the word. And the good part about that is maybe you never heard about Traders for a Cause, and then you saw it, and there's this opportunity to go. And then you find out about Project Impact. So we'll talk more about Project Impact in the weeks leading into the event, November 10th. But if you do go to these regional events, if you do find value and like those relationships, you can still hear and get a lot of value out of attending virtually to Vegas, the Vegas Traders for a Cause conference. So that's called Project Impact. Not only do you get the entire prior years, but you get live access. So anybody that is a live pledge member, if you've got it in the past year, you'll have access, or anybody that buys before November 10th will have access. So I'll put the link in scan just so you can review it, but that is something that we've done over the last couple of years. And again, it's just a small pledge, and you have access to all of the event material, which has been fantastic. So other than that, these conversations, these meetups, these all of this leads into these relationships and these conversations. And last night, Ed, who you guys know if you're part of IU, was here. He's staying up at the beach, and so is Lance. And it's really an incredible story, actually, even the connection with Ed and Lance that they didn't even realize until they got here. But Ed has been super generous and thankful of stuff that Lance has done, and didn't even realize that he had taken a great foot forward each time. I met Ed because we did a dinner in Las Vegas. You know, you could eat with me and Phil Godecker, and had he not taken that first step, you know, I may have never met him, right? And so that's what these events are about. Traders for a Cause, the meetups, the boot camps, the Clover events, all of that kind of stuff is putting your best foot forward and meeting the people that are going to help excel you in your career. So I had a lot of fun, learned a lot, and because of that, the point that I was making is, you know, Lance is also here at the beach, and we literally had a fireside chat, you know, a fire outside, and it was the best conversation I've had in a long time, because he did check all the boxes that I'm currently looking to check. And, you know, there's big decisions, big moves, big conversations, and he's done a phenomenal job at that. So that's somebody that I can look up towards, and, you know, almost like a mentor. And he's younger than me, right? So the point here is that it doesn't matter who it is. There's good information all around. It's just up to you to absorb it. And by the way, Hugo ended up coming again, which that's the third regional event. Lives in California. He just happened to be in Virginia this past week, but that's 3 times, and I talked about him on a prior Sunday video. But that's passion, that's putting in the work, and that's putting your best foot forward. So that's the weekend in a wrap. We've got a couple things midweek that I'm going to be doing. Some of the Clover guys are going to come up to the beach as well, but other than that, it gets back to business as usual, and then we've got the event in November. Last week, a couple questions that were sent in. So many nuggets in this video, but for the first time, I'm hearing about limiting the window of opportunity as part of the trading plan. And this is so often overlooked. As a newbie, it has helped tremendously with expectations, and even bridging that fine line between cutting losses quickly and letting winners run. And I talked about this a lot too. I said one of the adjustments that I have made was, you know, just that alarm clock at 11:30 a.m. You know, there's so many times that I've taken a trade from 11 a.m. and held all the way till 4. You know, and you forget why you trade, right? Oh, the freedom. You know, you trade because you want to be your own boss, and you can do whatever you want, and you've got all this free time. Yeah, well, if you don't reevaluate at 11:30 a.m., well, guess what? There's been a lot of times that I just hold names till 4 p.m. They keep me on desk. If you reevaluate and it's stuck in a channel, you'll realize that not only is your, you know, risk going up, your edge is going down. And at the point where it's like, hey, is it worth waiting for that next 20-cent pullback when the risk is also 20 cents? Or is it better just to go ahead and move on? And if it moves one way or the other, at least you can react to that and potentially re-get in the name. But are you trading, you know, time for a low edge, high risk trade? And a lot of times that answer is yes. Not necessarily high risk, but just low edge. And you're trading your time for something that is not worth it. And that's the point. So I'm glad that helped. Another question that was sent in, as possible, a topic for Sunday videos. I would really like to get into young Nate's head when he first started, his dreams and goals, aspirations, struggles, frustrations, and how his perspective and goals have slowly changed over the years. And that's exactly what we kind of talked about last week on the video, and what I started the presentation with at the Clover event this past week. And you know, because I think that it's so easy to get stuck in a rhythm and kind of, you know, you set the bar so high and you kind of want to maintain there and not let people down and not let yourself down is really the real thing. But a lot of times this is just unneeded pressure and unwarranted pressure. You know, it's not even real. You just are holding yourself to such a level and you don't let yourself just relax a little bit. And sometimes by taking a step back, you realize that all the things you thought mattered don't matter. And until you actually do that, you don't know. And so that's really been, you know, the 2023 kind of approach. And some people may roll their eyes at that, but like that's where I'm at. And that's what's important to me. And I'm sharing that just because it could be important to you and you don't even realize it. You know, there's been plenty of years. You know, how many people make New Year's resolutions and, you know, it's never happens, right? So it's about, you know, not just talking about it, but also being about it. And it's not easy. It's not easy to break habits that brought you to where you are. And if you even look at the example that I used is, something like Brady, and it's just like, what path are you continue to try to become great and greater and the greatest, or is there at some point, what's more important to you? And maybe a spouse and maybe kids is not as high up on that level, and that's fine. That's a personal decision. But for some, you've got to reevaluate why you actually started before it's too late. Because when I went to a party this weekend or last weekend, one of the things my buddy Tyler was saying is that it's such a small portion of their life, and trading's always going to be there, right? There's always going to be opportunities, but when your kid goes from 1 to 7, they're going to be 17 real fast, and it's such a small portion. So again, those that are young that are watching this, roll their eyes. But if you're in your 30s, nearing your 40s, or older, reevaluate. My size has been working against me every time. Less size, more time is definitely where it's at. And that's exactly, the same thing that I've struggled with in 2023. And I've been very open about, how, I've overcomplicated the market. And I'm trying, not necessarily forcing trades, but I'm just minimizing, what could have been good. I had great entries and it unwinds, but then I scaled into a position that causes me potentially to, de-risk when I would have been right all along. But because I was kind of oversized for the opportunity, or there's that fear of that rally, I'd rather be either, taking a smaller gain or covering it for flat or minimizing the loss. But in reality, if I just had less size and less entries, I'd probably still be in the trade, and it's at the low days, etc. So that's been something that I've definitely changed this year, and it's been super, super helpful. And then another question requested, could you show how your screens are organized, charts, montage scans, etc., and tips on how you're on top of everything? I swear you're a robot. You notice broken levels, swipes, front loads, wash trades, etc. in seconds of it happening, and this is a huge edge. And that's just something, there's a couple things there. In screens at some point, yes, I will show. I'm not at my house today, and I'm not in a position to do so, but I think the rest of the question was good, and that sometimes there's the starter positions just to kind of have it, your focus, it's in the portfolio, in your positions window, so you kind of see things. Also, just having certain names up there on watch. Usually I have a main screen of the ones that I'm actively trading, and then I have sort of secondary watches. And then I also have both volume and price alerts. And that's really just about kind of putting in the work and doing it ahead of time, so that you don't have to do the work in real time. It tells you, yourself. It's going to alert you when that stuff happens. And then on top of that, you've got a bunch of eyes in IU, and that's one of the benefits, to me personally, is that there's all these eyeballs that are watching certain names, and when when you surround yourself with people that are watching and trading similar things, there's a very low chance that you miss particular action. And it could just be somebody said something and then it puts it back on my radar and I have it on the side and I'm watching it. And it could be as simple as that, or it could be as simple as a price alert hitting and reminding me, or a burst, or any of the tools that Max has made for us in the room. And I think I had one more question, but it was a tweet. Actually, you know what? It was somebody writing the takeaways. Ty wrote, takeaways from last week. Get out of your comfort zone and meet people. Get in the room with the right people. Yes. Don't always milk every last dime out of names, and protect your average. So that was what I went over with the NVOS trade. And it's very important in this market to kind of take one step back, think big picture, maybe a little bit less size, and let that trade work for you. And again, it's always you versus you. Figure out what works for you and what your goals are. Super important, big takeaway, because it's so easy on social media to get lost in that. Everybody posts P&L and all these things that it's a hook, line, and sinker, right? It's all to capture the low-hanging fruit, because they know that's what people want. You're going to sign up for that. You're going to chase that. But in reality, you have to make sure that it's really what you're after. And a lot of times it's not. And especially when you get there, it's not as cool as you thought it would be. But it definitely sells. And then come prepared for two situations, right? So if you're only prepared for one situation, then you don't really have a trade if it doesn't do what you thought. So coming prepared, and if it were to do this, then I'd be prepared for that trade. If it does this, then I'm prepared for that trade. And I think that was a really good takeaway, and I appreciate, as always, people posting their key takeaways, because it also helps me learn what you guys find is super important. And then we'll get into the scans for the week ahead. I would note, Rito or ETO last week, right? We talked about these wash trading type of names. And so what happened, what I found interesting, and you saw, if you follow on Twitter, I had posted on Thursday, they're basically training people to buy the bids. And so it goes from a short bias where everybody slams the bid and gets squeezed to, oh, I could just buy at the same time as the big bids, and it's going to swipe up and it's free money, right? And so they do that 3 or 4 times, and now you've become the person that's looking to slam into those bids to the person that's actually buying the bids. And at some point, it will catch up. And as you saw, typically it's 80%. This time I think it was 84 or 85% to the downside. So nice opportunity there. Not something that I would even participate in the 650s, just because if I did get in there in the 650s, then there's a good chance that every single other day I would have been swiped out of my position. So something like that where it's 4s, 3s, 2s is, in my opinion, a better entry than 6. How is 4 a better entry than 6? Well, at least you have overhead, you have confirmation, you have proof that today is the liquidation day, it's staying heavy. At 6, you don't know if it's going 8, 10, or a circuit halt. That's why a 4 average or a 3 average is better than a 6 average. So anyway, let's get right into it. As always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. I'll put up the charts. Right now, it's just too hard for me to do both, and I don't have the setup for it. AFRM, I'm going to be watching. That had a nice big volume day, and that's what I focus on personally. I want those 50 to 100 to 200 million share kind of days. This one was in the 70, 80 million range, and had a nice big move from 15 to 18. There's going to be 2 trades that I'm prepared for. If we gap up big on the markets and it's over 18, I'll be looking for failed follow-through momentum. Or if it has a weak open, I like typically some sort of flush, in this case possibly 1750s, consolidate, and then go for the red to green sort of move. That's something that I'd be prepared with. AMC is going to be a great trade. At some point, they're probably going to raise money. That's why they did this entire thing. And I mean, it's a disaster. Longs got absolutely destroyed. And I mean, look, saved it from bankruptcy so far, but I mean, this is just turning into a dry situation, serial a repeat offender of delusion. So now I think they have 500 million authorized, and they're around 100 and something already. So there's a lot of downside coming, and a big raise coming, I'm sure. But that's also gives an opportunity. Everybody knows they're going to raise money, and if they're shorting, and it doesn't happen on the timetable they were expecting, then we're going to have a nice rebound. And we did have a nice rebound off of the flush on Friday, and then it went red to green and reject each time. So as long as you are, seeing the rejection, that's what's important. But nice flush down and rally would be ideal. Otherwise, gap up and watch and make sure that you're not trying to force a rebound, because as you saw yesterday, nice clean, or as you saw on Friday, nice clean move off of, I think it was the 1370s. That was the soak spot. Each time it came down, it kept on basing at 1370s. Once it broke that, not right away, but after multiple swipe tests back up, stays heavy, and you saw it just completely unwound the rest of the day. So I'd be ready for ideally gap down flush and some sort of rebound. But if not, it should potentially stay heavy because everybody's going to be trying to do the same thing and anticipate the offering and be there for the offering. So again, be aware if you do take the trade and it stays heavy, don't force yourself to be right. That's when you get smacked. And then we've got ACHR, which has been a fantastic trade. There was a negative article like a week or two ago, and they ended up squeezing out, but we've since had a nice exhaustion move into the 750s multiple times, and I've been fading it the last 2 days. I would look for some sort of ramp up towards 6 and then potential unwind back down, possibly under 5s in the near term. It seems like we got a lot of people on the wrong side over the 7s, and so now we're up against sort of this 550, 570, 580 kind of support. And if that breaks down, then we'll likely have that secondary unwind. So that should be a pretty nice opportunity. Under the failed follow through section, which is typically I'm looking for any good push and then for it to confirm that it's staying heavy, that's failing to hold the trend. I'd be looking for some sort of push 32 to 38. Those were the key levels, and for those of you guys that were at the Clover event, you saw my trade on that on Friday and how I wait for the exhaustion move to put on any size. 38's confirmed. That was the trade idea in IU, and then assume that 32s will hold until it proves otherwise, and that's why I covered in the 32-33 range. We've got GLG, higher the better. Some sort of gap up parabolic would be ideal. First day of really good volume was on Friday, so we've seen these. This is a China sort of walk-up play, so it's not something that I want to think it has to pull back, but I want to start monitoring it. If it does stay heavy, I'm interested, but for the most part, if it flushes, one candle, be careful, because it kind of matches the same way that CLEU started and many others. YS, great trade. This was a nice short on Friday. Shorted it right off the morning. It swiped and immediately stuffed, and then it tested a few times. Once those swipe tests passed, I went ahead and scaled in, and it was a nice trade. So I covered most of it, 110s, 115s, and then I left the desk. I put a stop at 120, and I got stopped out at 120. So I'd love to see some sort of gap up and then possible fade back on 1. That said, if it starts to consolidate over 120, hands off, potential long on Tuesday, Wednesday, when there's a possible T+2 situation. And then I've got DLO. DLO, I've got on the failed follow through section. That doesn't mean it has to be a short, but I'm just thinking that we might have that one last hurrah towards 20, and then we start to see some sort of failed follow through momentum, and then an unwind from there. That said, if it starts to build over 20, that completely voids my thesis. And last up is the continuation side. You guys know these are longs that I'm looking for, potential continuations. Some that I would never even touch long, but I want to continue to watch and wait until it starts to speed up for a potential parabolic short. But first one is a completely crappy company, MCOM, which it's always funny because literally every time GNS does something that works, they literally have a PR that does the same thing. And every time Mullen does something, MULN, they did a shareholder letter and the stock doubled. They ended up going ahead and doing the same thing and tried to get the stock going. And the last couple is CSHN and MREO. Those are two breakout charts that I like. Nothing I'm in, nothing that I have a position on, but just definitely something that I kind of want to keep an eye on, especially if 270s start to build on CSHN, and if 150 stay sort of the base for MREO, we might have a nice breakout towards the 2 levels. So that's about it. I'm gonna go take a long walk today because I am down on steps, and that's been a really good change in my kind of daily routine, is getting those steps in. It's been extremely helpful for energy. We'll see how screwed I get. Like I said, every time my daughter got sick at school, I got sick like 6, 7 times last year, and I've never been sick in like 20, 30 years. You know, people can cough in my face, and I never have an issue. But after I got COVID, you know, every single time my daughter came home, I would get it. So, and every single time I was about to hit like a PR at the gym, I get sick. Nope, sick. So it's been a good summer because I got my energy back. So now, you know, I've taken vitamins and lots of stuff to hopefully, you know, defend against her. But we'll see how that goes. But school starts up this week, so you know, that's August 30th. So summer went quick. But otherwise, have a great rest of your weekend. Thank you for watching, and as always, leave a key takeaway. And if you have any questions for the week ahead, I will be back on probably a regular recording as usual, and look forward to answering some more questions. Have a great weekend, and we'll see you guys in the room on Monday.